very good question coming to the point that I want to discuss with you next, is kind of what range of values exist, kind of what is low and high, basically, right? So there's some anchor values, and the first one we already computed. So 1 is the kind of beta of the market. It's also actually the average beta of all securities which exist. Right, so if you take all securities in the world and take their average beta, because they add up to the stock market, the average beta must be 1. Right? So all the betas are kind of spreading around 1. And now we can basically kind of give economic meanings to the betas depending on their values. So we draw this line here for the beta, and we have basically some intervals. We have the 0, and we have the 1. And it's kind of important where you are now in relationship to these anchor points. So a high beta is a beta that's larger than 1. Right. We have 2 stocks which have that property. These are the 2 car producers. So they generally have high returns when the market is doing well and low returns when the market is doing badly. These stocks will be called pro-cyclical, right? When the economy is doing well, they're doing well. So they move with the cycle of the economy. They're doing good at the same time and bad at the same time. So the high betas are here, and they're called pro-cyclical. And by the way, this distinction that I make here is not like academic that you can have one threshold value, so one cutoff value, like it's pro-cyclical if it's 1.37 or so. Or there doesn't exist any kind of that value. It's more like general directions in ballparks. So then we have a negative value here. So this moves in the opposite direction, or if I use the same terminology here, it is counter-cyclical. The words are on the same next page as well. So this would be counter-cyclical. So the negative beta tells me that this thing is doing good when the market is doing badly, and vice versa. And then we have a range of values in the middle. They're close to 0. So basically, it's not moving a lot when the market is moving, right? It doesn't matter really what the market is doing. And these values, which have a low beta, I would call them non-cyclical. Right? So their development and their returns are largely independent of what the market is doing. And I think that actually you can, by looking at kind of an industry or a business model or type of asset, you can actually pretty intuitively separate or select one of those categories for that asset. So we have an example here for counter-cyclical. So the vaccine producer was counter-cyclical, well, in the context of the corona pandemic, right? Can you think of other assets which are counter-cyclical? Or other industries, companies? Yeah, so that's a very good point. So think of what is a bad scenario. War is a bad scenario, right? So are there companies that benefit from war?
Weapons.
Unfortunately, there are. So if you're a weapons manufacturer, right, you have a high payoff in the moment that people need the ammunition and the weapons. So yeah, so that's a good example for counter.
Hospitals also in the time of war. Anyway.
Yeah. So I think we should distinguish a hospital in a war zone and a hospital in Germany, because they work differently, right? In the war zone, yes, I agree. How about hospitals in Germany?
They would benefit from corona.
Well, I'm not quite sure if they actually benefited from that, in the sense that they have so many costs to separate all patients, right?
Yeah.
And they had to cancel all the other surgeries.
Marginal.
Think of normal times. Does the profit of the hospital depend on whether the stock market is doing well or not?
But there's a lot of investors having strokes.
Yeah, okay, so you need to make up an argument like this, right? So either people are like, if the economy is doing badly, then there's burnout maybe, and people have injuries or like a stroke, as you mentioned, right? So they go to hospital or, yeah, but I would rather say that whether people get sick or not doesn't really have anything to do with the state of the economy, if it's not a pandemic, right?
Yeah.
Pandemic is probably. So actually, I would put the hospital rather in the non-cyclical area, because people need surgeries like for cancer independent of the economy. So,
Correlation is weak.
yeah, I would, intuitively I would put it in there, but I mean your arguments are fine, right? So it's debatable. Sometimes it's not so clear cut where to put something. Let's look for other counter-cyclical assets. They're actually pretty hard to find in real life, right? So you already have some good examples. There's one type of asset which is often mentioned in this context that we haven't discussed yet.
Maybe house prices when there is a war or something else in another country, like due to a lot of immigrants coming to a country.
Yeah, so it's also a good argument, right? So there are refugees that need kind of housing, and yeah, it's not quite sure what we observe at the moment in Germany. So Berlin has a large influx of, I think, about 50,000 refugees from the Ukraine. We actually have some experts, like two women, who teach for us now in the undergraduate program from the Ukraine. So glad that they could recruit them for teaching here. Yeah, but the house prices at the moment go down because of the recession that we have, right? So there are two things at the moment which coincide.
Maybe gold, for example.
Yeah, so gold will be kind of the prime example. The idea behind this story will be that gold prices go up when inflation is high, and inflation usually is high when you have a recession. It's not clear cut because they're generally you could actually, like there's a friend of mine who's also a researcher in finance who has a paper on basically good and bad inflation. So we're in this situation at the moment of bad inflation, the rise of energy prices, and it creates a recession. But there's also good inflation in the sense that if their economy is growing, everyone has income spending, the prices go up, and companies become more profitable, right? So inflation is not always bad in that sense, right? If the economy is doing well at the same time, we don't really care that much about higher prices, right? The economy can overheat, that's the danger then, but it's not as kind of severe as at the moment, right? So at the moment, the 10% inflation that we have is really, really bad for the economy. So that would be a bad inflation. Yeah, so gold has a negative beta most of the time. It's not always. And there are some weird effects that if you buy stocks of gold mines, for example, like companies operating them, they usually have positive betas. Right? So it's not clear cut either there. The gold is probably the safe bet against inflation. At the moment, we have a problem because gold is traded in US dollars, and we have a strong movement between US dollars and euros. So while the gold price goes up in the US, it was remarkably stable here because of the devaluation of the euro. Right? So that's another thing that you have to incorporate. And finally, gold is pretty interesting investment, at least if you buy gold coins, like physical gold, because in Germany you don't have to pay income tax on profits from buying and selling gold. It's treated separately then compared to stocks. Stocks, there you have to pay 25% tax on this, and gold is tax-free. It's physical gold.
The physical gold.
Yes. If you buy security on gold, it's usually not. Well, it depends on if it's an ETF, it depends on how they do it. If it's using financial contracts, you have to pay taxes. If they buy the gold themselves physically, it's tax-free. Right? So you need to be really careful if you trade the ETFs with gold, is how they do that. They usually have something, either they call it physical or synthetic. If it's synthetic, you have to pay taxes. But if you can buy gold coins, there's like pretty decent trading in something like Krugerrand from South Africa. Not sure why South African gold is so popular, or the American Eagle. That's the gold coin. It's one ounce of fine gold, roughly that size. You would pay roughly 1,600, 1,700 euros for one coin. So that's something you can go to any bank, basically, like Commerzbank, Deutsche Bank, and you can buy them there over the counter.